Hey everyone, welcome back to Big Markets Think Simple. You know how you've been chatting with ChatGPT, generating AI art, and making videos with AI tools? While you're doing all that, power plants somewhere far away are absolutely screaming. AI doesn't just consume electricity, it's basically an electricity monster. And the bigger problem? The roads that carry all that electricity to where it needs to go are dangerously outdated, especially in the US. This is a serious crisis. Transmission lines that are 50 plus years old simply cannot handle the surge of power that AI is demanding. They're on the verge of breaking down. And into this chaos walks one Korean company with a comeback story for the ages. The very first cable company in Korea's history, a company that nearly went completely bankrupt, is back in the spotlight. That company is Taihan Electric Wire. But here's the thing. Everybody's calling it an AI jackpot stock, but when you look under the hood, there are some uncomfortable truths that most people aren't talking about. Today, let's find out together, is Taihan a real gold mine or just shiny copper? Hit subscribe and like, and let's dive in.
This video is not investment advice. It's for educational, entertainment, and informational purposes only. I'm not a financial advisor. Please do your own research before making any investment decisions. Any investment decisions are your own responsibility.
By now, everyone knows AI consumes a ridiculous amount of power. We're already hearing about electricity shortages caused by AI data centers, and some forecasts say we'll need twice as much electricity by 2030 as we use today. It's a full-blown energy emergency. But here's the catch. Even if you build more power plants, the roads that carry that electricity to data centers, meaning the power cables, are also so old they need to be replaced. Nowhere is this more urgent than the United States, the beating heart of global AI. Over 70% of America's power grid is more than 25 years old, and a large chunk of the key transmission lines are over 50 years old. These are grandfather cables. Think of it like this. It's like trying to run the latest electric supercars on a narrow, crumbling, unpaved road. Overload the system and those cables could burn out or trigger massive blackouts. The U.S. government knows it has a fire under its feet. No matter the cost, they need to rebuild this aging power highway to actually unlock the AI era. And to send electricity farther, faster, and more reliably, the country needs massive quantities of high-performance, extra high-voltage cables, way more advanced than what's out there now. So the AI boom has created a massive wave of demand that goes beyond GPUs, chips, and power plants, all the way down to large-scale cable replacement. Now, where does Taihan Electric Wire stand in the middle of this enormous opportunity? Taihan Electric Wire is Korea's very first cable manufacturer. It was founded in 1941, back when the country wasn't even called Korea yet. It started as Joseon Electric Wire. You could call it the grandfather of Korea's entire cable industry. During Korea's industrialization era, Taihan grew alongside the nation, laying down power grids and telecom infrastructure. At its peak, there was almost no business it wasn't involved in, from home appliances to construction. There was a time when it stood shoulder to shoulder with Samsung and Hyundai in the upper ranks of Korea's corporate hierarchy. Then, in the late 2000s, everything changed, and not for the better. A series of aggressive overseas acquisitions collided with the 2008 global financial crisis, and the company was shaken to its core. Debt snowballed to the point where the debt-to-equity ratio exceeded 2,400% at its worst. The founding family, the Seol family, could no longer hold on to management control, and around 2013, they stepped down and the company was placed under creditor management. Most people thought Taihan was finished. Then in 2021, a white knight appeared. Hoban Group, a company known primarily for construction, boldly stepped in and acquired Taihan. At the time, a lot of people scratched their heads. Why is a construction company buying a cable manufacturer? But Hoban wasted no time acting. The first thing Hoban did was what you might call financial CPR. Through debt for equity swaps and capital raises, they aggressively cleaned up the balance sheet. And then they started redirecting the entire business strategy. So what exactly did Hoban change about Taihan's business? Let's break it down. Taihan's first business, extra high voltage cables. These are the power highways that carry electricity hundreds of miles from power plants to cities and data centers. Specifically, products rated at 230 kV and above fall into this category. Think of it like the 8-lane expressway of the power world. And because these cables need to withstand such extreme voltages, only a handful of companies in the entire world can produce them. The crown jewel here is HVDC, high voltage direct current cable. This is the supercar of the cable world. It's cutting-edge technology that drastically reduces the energy lost when transmitting electricity over long distances. Second, industrial cables, medium and low voltage cables that deliver power to factories, office buildings, and homes, the most common type of cable you see in everyday life. Third, submarine cables, high-complexity cables that transmit electricity under the ocean, essential for offshore wind energy projects and cross-border power grid connections. HVDC technology is heavily used here too. Fourth, wire rods and winding wires, basic materials made from processed copper or aluminum. Think copper rods and coils. These are the raw building blocks of cables. There's not much technological differentiation here, and margins are highly dependent on copper prices. It's a high-volume, low-margin business. Of these four segments, the ones expected to benefit the most from the AI boom are HVDC cables, especially HVDC, and submarine cables. AI data centers, unlike ordinary power consumers, need to receive massive amounts of electricity efficiently over long distances. Traditional AC or alternating current systems lose more and more energy the farther electricity travels. HVDC systems drastically cut those losses, delivering power reliably at scale. Whether it's replacing America's aging power grid or expanding offshore wind projects across Europe and Asia, HVDC-based HEV and submarine cables are absolutely central. After Hobon's acquisition, Taihan went all in on these high-value-added businesses. They completed a submarine cable plant 1 in Dongjin, South Chungcheong province, and are currently building plant 2, designed to produce 640 kV class HVDC submarine cables. Plant 2 is roughly the size of 30 soccer fields, and plans include installing a state-of-the-art VCV tower standing 187 meters tall, the tallest in Korea. When complete, production capacity will be nearly 5 times what it was before. Taihan has also secured Korea's unique submarine cable-laying vessel, the Palos, and acquired a submarine installation specialist company, rapidly evolving into a full turnkey solution provider capable of design, manufacturing, and installation all under one roof. As a result, they've been landing major projects at home and abroad, including the Anma offshore wind farm in Korea and contracts in Singapore and Qatar. So with all this focus on high-value AI-era businesses, how do the actual orders look, and is any of that translating into real revenue and profit?
Taihan's order backlog has hit a record high. As of end of 2025, it stands at approximately $2.5 billion. Compare that to around $650 million before the Hobon acquisition in 2021. That's nearly a 4x increase, an explosive jump driven largely by overseas mega projects in EHV and submarine cables from the US, Europe, Singapore, and Qatar. But here's where it gets awkward. When you look at the actual revenue and operating profit, things are still a bit fuzzy. In 2025, Taihan's revenue was approximately $2.5 billion USD, with operating profit of around $88 million USD, an operating margin of roughly 3.5%. Given all the talk about high value-added businesses, you might wonder, why is the margin still just average for the cable industry? To understand why, let's imagine Taihan's $100 of revenue broken down like this. Wire rods and winding wire account for about $53, cables and power lines about $25, merchandise, cable-related goods bought from third parties and resold about $10, and other items about $12.
As you can see, wire rods and winding wire make up more than half of total revenue. This is the low-margin, high-volume segment where margins are slim and profitability swings with copper prices. In other words, the order backlog is packed with next-generation, high-tech cables, but the money actually coming in the door today is still being driven by the low-differentiation, commodity-like materials business. Why the gap? It comes down to a structural feature of the cable industry: time lag. Getting a cable order doesn't mean money flows in right away. The cable has to be manufactured in the factory, loaded onto ships, transported to the project site, and then actually installed, buried underground, or laid on the ocean floor. Only when that entire process is complete does revenue get recorded. That full cycle takes an average of 2.5 to 3 years. The result? Order intake is hitting all-time highs on the back of the AI boom and grid replacement demand, but most of today's revenue is still being pulled along by the older, low-margin wire rod business. Margin improvement has started, but fully transforming the structure will take a bit more time. So, what risks should we absolutely be tracking during this waiting period? Risk number 1, fierce global competition. Taihan isn't the only one cashing in on the AI boom. The world's top players, Europe's Prysmian and Nexans, ranked number 1 and number 2 globally, Korea's LS Cable and System, and Japan's Sumitomo already have a firm grip on the high-margin submarine cable and EHV markets. These are the companies that wrote the rulebook for this industry decades ago. While Taihan is just now completing its large-scale factory in Dangjin and securing the Parlos cable-laying vessel, these rivals already have a significant lead in experience, technology, and delivery capability. Stealing market share from them will require an intense battle on technology, price, and credibility. On top of that, there's an ongoing technology theft lawsuit with LS Cable and System. LS has filed a police complaint alleging that proprietary design technology for its submarine cable factory was leaked to Taihan. Depending on the outcome, this could expand into civil litigation, adding both reputational and financial risk. Risk number 2, copper prices, a double-edged sword. The cable business is deeply sensitive to the price of its primary raw material, copper. When copper prices rise, revenue looks bigger, but if prices drop sharply, profit margins, especially with Taihan with its heavy wire rod exposure, can shrink almost overnight. And if prices spike too much, project sponsors sometimes delay or cancel orders altogether. Risk number 3, revenue recognition delays and execution risk. Large international projects take 2 to 3 years from order to revenue recognition. Along the way, environmental regulations, community opposition, weather events, or cost overruns can delay projects or turn them into losses. U.S. projects in particular come with especially complex regulatory hurdles. Risk number 4, the pace of structural transformation. Hoban Group is investing aggressively, but the high-value segments, EHV and submarine cables, still only account for roughly 20 to 30% of current revenue. Fully moving away from the low-margin wire rod and winding wire business may take longer than expected. Hoban's firepower and factory expansion are clearly formidable weapons, but if these risks aren't managed well, the AI boom tailwind could turn out to be just a brief flash in the pan. So, there you have it, the Taihan electric wire story. Korea's first ever cable manufacturer, a company that once stood on the edge of collapse, is rising again, this time to build the power highways of the AI era. Orders are exploding, but most of today's revenue is still being pulled along by the low-value-added legacy business. It's an in-between moment. Can Taihan push through fierce global competition, copper price volatility, and project delays and successfully complete the transition to a truly high-value business? Or will it just catch a brief glimmer of the AI boom before fading back out? In the end, this company's future comes down to one question: how quickly and how steadily can it grow the share of high-value-added business? If today's video helps you understand Taihan electric wire a little more clearly, please hit subscribe and like, and I'll see you in the next one. Thanks for watching.